Welcome back to Live from Paris here on France 24. It's time now for a look at today's business news with William Edwards from our business desk. And it's been a busy morning on the business desk, William, hasn't it? Given that news from Greece. And the markets seem to have been given a boost by the result. Yes,
the Asian markets, which of course are open at the moment, they have all very much been in positive territory off the back of the news that, of course, pro-bailout parties have won the Greek election, and they look likely to stick in some form or another to the commitments of the EU and IMF bailout. You can see there a strong reaction across the Asian markets there. Banking stocks doing particularly well. European stock futures also point to a strong reaction when European markets open in the next hour or so. Plus, of course, the euro itself has got a bit of a boost too on the currency markets. But, of course, while there has been that good market reaction, I think few would argue that the European crisis has now been solved. Let's take a look at the challenges that still very much lie ahead for Greece.
A sigh of relief for Greece and the Eurozone, but there's no time for election euphoria. The crisis is deepening, and the current austerity drive isn't doing enough to get the economy back on track.
We will work together with our partners in Europe in order to supplement the current policy mix with growth enhancement policies. We are determined to do what it takes and do it fast.
Samaras has pledged to keep the country's commitment, but has said he wants to renegotiate the terms of the rescue deal. Greece's European partners seem ready to give some leeway to the new government. Germany's Foreign Minister Guido Westerwelle said that while substantial changes could not be made to the current agreement, Europe could discuss giving more time to Greece to meet its targets. But Athens is already falling behind on its commitments. Despite severe austerity measures, the country is well off course to meet its fiscal targets. Public sector reform and the massive privatization scheme have been stagnant. With an August deadline for a €3.9 billion debt repayment looming, Greece desperately needs the next tranche of aid money. But the €1 billion payout has been delayed because of the political standoff.
OK, so to talk about the implications of today's vote, we're now joined by Philippe Wechster, who is, of course, the head of economic research at Natixis Asset Management. Thank you very much for joining us. In your view, can Greece stay in the euro in the long term? I mean, is this today's vote just putting off the inevitable a little longer?
Well, we have to be happy with the vote, you know, because it avoid a rapid break in the euro area, because we do not know what would have happened with a negative vote and with an exit of Greece. But what we see currently is that we have to help Greece in the short run to avoid a new crisis, as we've known in the last fortnight. You know, in Greece we had a strong crisis. We have to avoid this, and at the same time, we have European government have to propose new institutions to make the euro area sustainable in the long run. And that's what we have to things have to evolve in this way, because we've seen that former institutions do not work anymore. So we have to change, probably with more federalism on budget side, on fiscal side, probably a banking union. And in that case, institution will be more sustainable. And in that case, we will think about Greece in this environment. But what we know and what we see about Greece is that their own situation is really weak. You know, their GDP is decreasing at a 6% rate from the beginning of 2010. They have a 20% unemployment rate. So we have to help them to avoid a crisis in 3 or 6 months.
Yeah, and so you've mentioned the idea of federalism, sort of Eurobonds that obviously François Hollande has been talking about, etc. But on the Greek level, the smaller, not the Eurozone level as a whole, but just in Greece, of course, there are worries that they won't be able to keep up with their repayments. Do you think that there will have to be more leniency from the EU and the IMF when it comes to their repayments?
Of course, we have to give them delay. We have to probably restructure their debt. Because they won't be able to pay, you know, to repay the debt. And so we have to negotiate from Greece to an European Union to avoid a new collapse, a new crisis. And in that case, we have to discuss more from France, Germany, and European Commission.
Now, clearly, we've seen relief already on the markets from this result. European politicians also relieved, as you said. But could this result, would an anti-bailout result have actually forced European leaders to take action? Would that actually have been better?
Yeah, but we couldn't take the risk. The risk of a Greece exit, with the anti-bailout, if Syriza was in power, we couldn't, maybe we couldn't avoid an exit. We don't know exactly what would have happened. But when you look at the situation in Spain, in Italy, we didn't want to take the risk. And when you look at the economic outlook in Europe, a lot of countries are in recession or almost in recession. So it would have been a negative shock on European economy. So maybe Greece will be still very costly for Europe. But in balance, probably it was better to have this solution than an exit with the contagion on the Spanish or Italian market.
So it's the best of of a difficult choice, I suppose,
Absolutely.
At the moment, isn't it? But in a speech today, the British Prime Minister David Cameron, he's apparently going to say that without making the big sort of moves toward federalism, I should say, in the eurozone, sort of Eurobonds, banking union, etc., there is a risk of either the eurozone breaking up or of just continued stagnation. Do you agree with that assessment?
Yes, we have to change. We still see that institutions do not work anymore, and we feel that we need more integration, and that's what is said on banking union. It's say the idea of the banking union is to say, we can have a kind of framework for financial stability. We need probably a unified budget situation for Europe. But it means that we need some transfer of sovereignty from each government to Europe. It's complicated to do that, but we know that without this transfer and this kind of federalism, everything could break up rapidly, because we need to make a unified, to give a unified message to the world.
Okay, so what then should Eurozone politicians be concentrating on in the next few weeks and months? What have they got to do now to solve this crisis?
Well, we have to give some hope for everyone, because for the moment we feel that the situation is weakening every day or every month, because we see a crisis in Greece, we've seen a crisis in Spain, and so we have to change the picture and give more expectations to everyone, for us inside euro area, but also for people outside the euro area. And inside, the point is to say, we have heard what you said, and we have to change our mind on what euro area has to be. And in that case, probably we have to change institution, just to say we are a unified region. And in that case, if there is a crisis in one country, we will not have in mind that this country can exit the euro area. In the US, when there is something wrong in Montana, no one expects that Montana will exit from the US. We have to change our mind and invest in mind on this in euro area.
Okay, well, thank you very much indeed, Philippe Vechter from Naxis Asset Management, for joining us here on France 24. And thanks, William Edwards, for that wrap-up of the business news. That's it from us for now. Thanks for joining us. Stuart Norville will be here with more headlines after the weather.